6 B's for being a great trader. So, what are the 6 B's? Number 1, be prepared. Number 2, be present. Number 3, be patient. Number 4, be disciplined. Number 5, be free of attachments. And number 6, big R winners. So let's go through each of these. Be prepared. We have to be prepared to trade. We have to be prepared mentally. We have to be prepared physically. We have to be prepared emotionally. We need to have a plan when we go into every trading day. Now, when we go into the day, we can be adaptable. We can go with the flow of what's going on, but we cannot just walk in and sit in the chair and think that we're going to make money. I want you to think about, I'm a big sports guy. I want you to think of one of your favorite sports teams. I want you to think of their coach. And I want you to think about, how would you feel if you knew the coach of your favorite team just sent the team out to play the game? They didn't practice. They didn't watch game film. They didn't have a game plan. They just rolled the ball out and went out and played. How would you feel? You'd be pissed. You'd be calling for him to get fired. This is ridiculous. How could the head coach of the Green Bay Packers or the head coach of the the manager of the New York Yankees or the head coach of the Denver Nuggets, how could they not be prepared? It's insane. Yeah, we're going to trade not being prepared ourselves. Being prepared is one of the key elements of our success. The better prepared we are, the better we're going to trade. So, as I said, it's not just having a game plan. The game plan is really important, but it's also, am I mentally ready to trade today? Am I physically ready to trade today? Do I feel sick? Did I just have a fight with my wife? Are my kids going crazy in the house? These are all things that are going to have us not trade well. So we have to be ready to go. Number 2, be present. Guess what? If you're not around, if you're not available, you can't make money. Now, you don't have to, it depends on how you set the game up. But see, the market waits for no one. So you have to set the game up so that you can be present when you need to be present. Okay. Number 3, be patient. I talk about there's 2 types of traders. There's traders who overtrade and there's traders who are afraid to trade. If you're in the overtrading camp, and everybody falls in one of those 2 camps, by the way. If you're in the overtrading camp, and that's the camp I've always been in, I'm more inclined to make the marginal trade than skip it. We need to be patient. We need to wait for really great setups. Good setups are not going to get it done. Good setups are going to distract us. They're going to dilute our focus. And they're actually going to keep us from being as profitable as we can be. So we need to be patient. Being patient also means that we are okay not sitting at the screen for an extended period of time and not making a trade. It means that we are willing to wait for the right trade to come along. Now, we may be able to step away from the screen, which is one of the things we'll get into in an upcoming Trader Tip Tuesday. We may be able to step away from the screen, but no matter what, we're going to have to be patient. Number 4, be disciplined. Can we follow our plan? We spent all the time preparing. Okay, we've prepared. We've created a great plan. Can we follow it? We have trading rules. Can we follow our rules? Can we be disciplined and execute consistently with precision? Number 5, be free of attachments. This could be a whole workshop on its own. Be free of attachments. What is an attachment? An attachment is when you attach yourself to an outcome. or you attach yourself to a person or to a team or to a group. When you attach yourself, you're not able to see the situation for what it is. You become blind because of your attachment to whatever it is you're attached to. In trading, we get attached to an idea. We're in an uptrend. So I want to be long. And I have this belief that the stock market's going to go up, or gold is going to go up. And you really believe the story. And so what happens is we become attached to our positions. We become attached to our ideas. We become attached to being right. And all these attachments actually really hurt our trading. So when we become attached to a position, we have a position that's working really well. We actually have scarcity starts to come in, where if I let go of this position, how am I going to make money? So we become attached to it. We don't want to let it go. We become attached to an idea like gold is going up. So now gold starts to go down, and all I'm doing is looking to buy, looking to buy, and looking to buy. And I might be in a situation because I only think it can go up. I'm attached to being long, that I buy and get stopped out. I buy and get stopped out. I buy and get stopped out. And I find myself having lost a lot of money because I was attached to being bullish. The flip side to this is that we're free of attachments. We can have an idea. We can get feedback from the market and see if our idea is being validated. If it's being validated, then we get in. If it's not, then we don't enter. Or if we are in and it's not being validated, we get out. But what people often do is, because they're attached, they don't see that the best trade may be to go the other way. This is one of the things I learned in my own trading. When I go out, I do all kinds of homework. I'd be really well prepared, and I'd say, this trade is going to be a great trade. I know this gold trade is going to be a great trade. So I get long gold, and I believe in it. And then it's not working. And so I start looking for every reason why gold is going to turn around and go in my favor. I start looking for every reason of confirmation that the trade is not going to work now. As I said, I might buy it and get stopped out. I'm in buying again. I'm in looking for feedback that the market's going to turn around. And it doesn't. And then I would get really angry. I get really frustrated because I did this work and I knew it was going up. And I didn't want to miss the bottom. I didn't want it to go up without me. So I could not see the market rationally. If I'd been able to step away and look at it rationally, what I would see is that it's actually going down. And what's so interesting is the trades I had the highest conviction in. Because I had the highest conviction, I often had the highest attachment. I couldn't see the market for what it was really doing. And if I could just step back, if I could just release my attachments, what I learned is that my work was really good. And when I did my work, some of those ideas really kicked ass. But the ones that didn't actually were giving me incredible feedback. And that is, if I did all that work and I was that convinced the market was going up and it wasn't, guess what? It was probably going the other way big. This is one of the things I started to notice, is that my best ideas, when they didn't work, they'd actually go the other way big. And it made sense. If everything lined up and it was strong and it didn't follow through, well, then everything was really weak. So I learned, when I had my highest conviction ideas, to step back. And when those ideas were failing, it was probably time to go the other way. Being free of attachments will revolutionize your trading. Now we go to number 6, big R winners. We like to say big R winners or jackpots solve all our problems. They do. Big R winners solve your problems. If you can get big R winners, I'll just show you an example. I had a trade on Friday. I lost an R in my first trade. I lost a quarter R in the second trade. Came back in on the third trade. And on the third trade, at the end of the day, it finished about a 4.5 R winner. So I'm up just over 3R in the day. But that trade still had significant upside. So I could have closed it, took a 4.5 hour winner, or I could have let it go. Letting it go, letting it continue to work, knowing that I had managed a trade where I had no risk in the trade. I had peeled off just enough. I had no risk in the trade and let it go. By the end of the close today, it was an 11R winner. Now, I had another 1R loss today. One of the guys on my team had 2R losses. Right. So there's 3R in losses today on my team. I had 1.25R in losses on Friday. That's 4.25R in losses. But guess what? This one trade, all in, was over an 8R winner. So net, think about it. Net, I have 5 losers and I have 1 winner. Sorry, 5 losers and 1 winner. Right, my win rate's 17%, but I'm up 4R. That is the power of big R winners. So what I like to do in my debrief is I like to go through all of these at the end of the day and grade myself. Was I prepared? I grade myself on a scale 1 to 5. 1, I was totally unprepared. 5, I was prepared as I could be. So was I prepared? And I grade myself. Was I present? Was I available? Was I around? Grade myself on that. Was I patient on my setups? Give myself a grade for that. Was I disciplined? Give myself a grade for my discipline. Was I free of attachments on my ideas and my positions? Give myself a grade for that. And then big R winners. When I set my trades up and then when I managed them, did I go for big R winners? And give myself a grade there. Now, you can look at these 6 Bs every day in your own trading or every week, depending on the time frame you trade, and grade yourself. And what you'll see is if you do this every week, it starts to raise an awareness about, are you being great in the areas that have the biggest impact on your success? So to help out with this, if you actually look in the comments, I have a free PDF for you that if you click on the link, you can gain an access to this PDF that is a debriefing format that incorporates the 6 Bs and shows an example of a typical trading day debrief. You can use this and you can find this is it will be a very helpful format for you to be able to raise awareness of your trading and hold yourself accountable. Do that debrief every day. Don't miss. If you trade, do the debrief. Make one of your rules for trading. You know, when we evaluate ourselves, do we follow our rules? Well, to say you followed your rules, you have to do the debrief. Make that one of your rules. So go ahead and click on that link to get that PDF. Feel free to share comments below. And this is Trader Tip Tuesday, where every Tuesday I come to you with tips like today to help you raise your performance to an elite level. I'll see you next Tuesday.